So we're now going to look at expenses or revenues prepaid or due. So it's not very common that we see these in final accounts, but it's very important that you be able to deal with them if you should see them. Now sometimes they come up as part of bank adjustments, so take a look at the bank video if you haven't done that yet. So expenses and revenues prepaid or due. So just to recap on this for a little second, the difference between the trading profit and loss and the balance sheet. The trading profit and loss is where we record the expenses and revenues for the current year. Okay, so just the 12 months of the current year, we're putting the revenues and expenses in here. And the balance sheet is where we would record any expenses or revenues prepaid or due at the end of the year. So as at the 31st of the 12th, right? Because at the end of the year, expenses or revenues prepaid or due are either current assets or current liabilities. So that's why they go in there. So 12 months of the current year, revenue or expense is recorded in the TPL. If we had a revenue due to us at the end of the year, for example, rent receivable due from a tenant at the end of the year, that'd be a current asset. Whereas if our tenant prepaid us for say 6 months of the next year, that's actually a liability because we owe the tenants the 6 months space in that building or whatever next year. Now, if we had an expense prepaid, such as insurance or rates prepaid at the end of the year, that would be a current asset here. But if we had insurance or rates due, well, that wouldn't be a good idea. You should never have insurance due. But let's say light and heat due at the end of the year, that would be a creditor minus 1 year. I say we should never have insurance due. You'll probably never see that because if you hadn't paid your insurance, you're not going to get paid your claim. So that's not very smart. Right, so let's take a look at some past exam expense and revenue prepaid and due adjustments. So there's only a few, but we see it here in the 2018 one. It came up as part of the bank adjustment. So again, if you haven't looked at the bank adjustment video yet, I would definitely recommend you do that first before you start looking at this one. But anyway, there was a difference between the bookkeeper's bank figure and the bank. So for example, AIB's bank figure. So what you need to do is just reconcile it, so get the same bank figure at the end and then do all your different bits and pieces in the accounts you need to do. But we're just going to look at part 2 here. So part 2, it says rent due on the 31st of the 12th, 2017 was paid directly into the firm's bank account. So what we should do then is we should be looking at, so this is how we lay out the bank adjustment. So again, look at the bank video. But what we do is we look at the trial balance and we see here rent up until the 30th of the 9th 2017 is 9,000 on the credit side. So that is rent received 9,000 for 9 months. Okay, so that means we receive rent of 1,000 every month, and if it was 9,000 up to the 30th of the 9th, rent due after that would be for the 10th, 11th and 12th month. So that would be 3 months rent that would be due. And that would impact the bookkeeper's bank figure. So it would reduce the bank overdraft by 3,000 because 3,000 would come into the account. And then we would have rent received. We would add 3,000 to the already 9,000 euro there. And that will go in the add operating income in the TPL. So rent received goes in add operating income. You have your 9 from the trial balance and now you add the other 3. And that's basically that one done. In 2016, it also came up as part of the bank and it was note 2, rent of 5,100 for 6 months ending 30th of the 4th, 2016 was paid directly into the firm's bank account. Okay, so what do we have here then? So it didn't affect the bank figure, but it was rent of 5,100 came into the bank, so it reduced the bookkeeper's bank overdraft figure. And now we're doing the accounts for the year 2015, okay? And it's paying for rent up until the 30th of the 4th, 2016. So 4 months of next year. So 4 months of next year, all right? And then 2 months of 2015. So we have to put the 2 months of 2015 into the trading profit and loss in add operating income because it is rent received because it was paid directly into the bank's account. And then we have rent receivable prepaid plus 3,400 into balance sheet creditors minus 1 year. And that's that one done. So the bank minus 5,1, because the bank overdraft there, you have rent received 1,700, and then we split the other 4 months. We put 4 months into rent receivable prepaid, which is a liability because you owe the tenant the space for those 4 months. So 3,400 goes there. So that's that one done. Now, in 2012, note 7, the advertising payment is for an 18-month campaign which began on the 1st of the 10th, 2011. So we have advertising here, 4,800. And then note 7, the advertising payment is for an 18-month campaign which began on the 1st of the 10th. So it happened for the 10th month, 11th month, 12th month. So 3 months there. So we have to split it up then into advertising for the year, which will go in selling and distribution, and then we'll have some advertising prepaid at the end of the year because we're doing this for 2011. So we've got 3 months into the TPL for 2011. That 800 should be under here, sorry. So 4,800 multiplied by 3 divided by 18 is €800 for the current year. And then you've got advertising prepaid at the end of the year. You've got 15 months advertising prepaid at the end of the year. So 4,800 by 15 multiplied by 15 divided by 18 is 4,000. So that's €4,000 there, current asset at the end of the year. The same type of thing happened then in 2010 in note in adjustment 8. The advertising payment is towards a 24-month campaign which began on the 1st of the 10th, 2009. So we have the advertising here, 2,400, and then note 8 here, advertising payment, there we go. Okay, so same, but a little bit different. So we're doing the accounts for 2009. So different amounts, that's the only difference here. We've got 2,400 is advertising. 3 months of that belongs to the year 2009, so we're going to put that in the trading profit and loss. So that's 300 there. And then we're going to have advertising prepaid in the balance sheet in current assets. You've got 2,400 multiplied by 21 months out of 24. That is 2,100 in current assets there. And that is all of the expenses and revenues prepaid are due then at the end of the year. So expect to see them, but just remember your TPL is for the current year and then balance sheet is for anything prepaid or due at the end of the year.